introduce our guest for today, a young and energetic investor, Mohit Jangir, a founder at Investing Hut, and he has been into equity research from actively from 2017. And since he belongs to a investing family, so he had started quite early, and he has been his niche is basically investing in startups and unlisted companies. And throughout this session, we will surely learn nuggets and wisdom from Mohit. And so, Mohit, to start with, though we all know that you belong to in the background, you got from a family of investors, so that is an edge which you got. But how it started for you, and you identified that you'll be into equity markets full time? Yeah.
So yeah, Prince, thank you for the introduction. So actually, it started when in those times, like when I was 11 or 12 years old in 2011 12. So at that time, we used to love लैपटॉप्स सो शुरुआत ऐसे हुआ था कि गैजेट्स जो होते हैं वो बहुत पसंद आते थे जब आप बच्चे होते हो 11-12 साल के सो एट दैट टाइम my father bought a laptop and he used to research about these companies in that laptop. तो उस टाइम से इंटरेस्ट ऐसा शुरू हुआ लैपटॉप की वजह से क्योंकि आपको थोड़ा रिसर्च करने के बाद में गेम्स खेलने का मौका मिलता है. So this is how the journey started. This is why started reading about the companies because my father used to teach me like you have to read about this certain company, about this certain business. How do you read about it? What is the process? You have to go through the business. You have to go through the shareholding patterns of that company. So जो बहुत ही basic checks होते हैं, my father used to teach about those basic checks और उसी से जर्नी स्टार्ट हुआ. सो इट बेसिकली स्टार्टेड फ्रॉम दैट थिंग बिकॉज आप जब भी थोड़ा कम एज में होते हो तो आई थिंक या दैट इज इट.
So Mohit, that is quite interesting, and I can, being a young age person, attraction towards gadgets is one thing, but learning the nuances of investing is not easy. So if I were to ask, like, what is your core to investing, or maybe your thought process or framework, how you initiate starting business analysis, or maybe identifying ideas, how you go about it?
So if I talk about my initial days, so when I started investing, when I started reading about these companies, so I used to read more about the companies which had lower price points because we all think that if the price is lower then there is a higher probability of getting multi-bagger returns. Like if the price of any stock is 10 rupees, so a 10 rupee stock going to 100 rupees, the probability is higher than a 100 rupees stock going to 1000. So that was the thought process at that point of time, and it happens with all the beginners. So they think that if like if we take the example of Yes Bank or any ADAG stock, so the price is very low, so they get very attracted towards these stocks. So uh, stocks like these Yes Bank, ADAG, they attract a lot of young investors, a lot of beginners because the price point is low. But you learn from your mistakes, so even I did. There were some success stories, and from your success stories you learn how to catch those strokes, how to repeat your success, and from your mistakes you learn how to avoid them. So you can commit a mistake, and most of the beginners do because this is why they are called beginners. They are not experts. They are here to learn something. They are trying something new which they haven't tried yet. So from that the journey started. Then I started looking at businesses, so the potential of business, how are the promoters, what is the shareholding of the promoters, what is the balance sheet of that company. So interestingly, I don't come from a commerce background. So in my 11th and 12th class I had science as my core subject. So, and mathematics was my favorite subject. So I don't come from that background. So I started reading about how to read balance sheet, how to research about the company's accounts. So all those learnings combined, then I started reading the balance sheets of all the companies in which I am investing. So that was the process, I think. So starting from that category, when I used to focus on the price point of a company, so if the price is low, I used to get very attracted towards that company, towards that stock. But as the time moves, you learn from your mistakes and then you correct them. So this is how I moved. So
So
currently
currently,
I Yeah, Prince, please go on.
yeah, go on, Mohit. So
No,
basically,
so
No,
I
so I
was
was yeah, basically I was asking about how you screen ideas because analyzing a company is second thing. First, you get some ideas or maybe. So what's your screening criteria basically?
okay. So, Prince, as you know, and as many of the listeners know, that there are many types of investing which you can do. First is growth investing, second is value investing, third is special situation investing, then there is proxy investing or thematic investing. So, there are many categories or many styles of investing which you can do. But and the screen your particular question which you are asking, so the screen is also different for all these styles of investing, all these types of investing. So if I talk about growth investing, then you simply look at the businesses where you can expect a very high growth in next 3 to 5 years. As an investor, if my time frame is 3 or 5 years, then in growth investing I look for those companies or those sectors where I see exponential growth in coming years. In value investing, I look for very deep value stocks which are uh, available at beaten down multiples. If I look at their valuation ratios, in special situation investing, I look at demergers, I look at spin-offs. So I look at right issues. So these are some screens which you can also use. But the favorite screen of mine is when the value gets growth. So suppose if certain stock, I am not taking any example because we are not discussing about any stocks thus far. So suppose if any company X is trading at one time their book value, or let's say 10 or 15 times their earnings, and you can clearly say that this stock X is a very deep value stock. But why is it not performing in terms of stock prices? Because there is no growth. So when value is combined with growth, so the stock is available at 10 times earnings, or the stock is available at one times book, but when it will re-rate when the growth comes. So when the value is combined with growth, then only you can get those so-called multi-bagger returns. So the screen which I prefer currently is the stock is available at very inexpensive valuations, and the growth is about to come, because that can re-rate the valuation of that company.
Right, Mohit. So Vineet, you have any question or
Yeah. Hi, Mohit. How are you?
Hi, Vineet. I'm very well. How are you?
All well. So, Mohit, I understand the screens, what you just mentioned, they are all, past data driven, and they do not, factor in the future growth potential. So, the screen will only help you on the past data. How will you screen the future growth potential?
Yeah, very good question, Vineet. So, I think there is no holy grail for projecting those numbers which you are asking, that if any company is available at 10 times earnings, you can clearly see that this stock is a deep value stock, and the valuation ratios are very inexpensive. Valuation metrics are very inexpensive. But if you are projecting those future earnings, future numbers, then you have to rely on the management, the commentary given by their management in the con calls or in their AGM. So even by reading their annual reports, what is the prospects ahead for their industry or for their company? What are the new things that they are doing? So from all these things, or the current theme, or the theme from 2021, or the theme for last 2 to 3 years, which has been pent up demand in various sectors. So when all the sectors went through a very lean page due to COVID, and now we can clearly see that all those industries are reviving back. Now they are crossing those pre-COVID levels, and pent up demand is there. So what happens when any industry goes through that lean patch, then all the weak players, they get out of the market because of their you can say many reasons, because of their weaker management of the capital, weaker balance sheets, and for quality reasons. There are many reasons, there are hundreds of reasons. So because of that, you can clearly see in last 2 years, these returns which most of us have made, they are purely because of the pent up demand across the industries, and weak players were out of the industry. So we have to
Mohit,
rely on the
Mohit,
management, their commentary.
Mohit, sorry to interrupt.
Yeah.
Again, I think we are going to the hindsight bias once again. Let's take a real life, real time example. I do a screen and I look for whatever multiple, maybe low P multiple, or maybe whatever way price to book you look at it. I screen it from the screener. I will get hundreds of companies which are undervalued. So I cannot be expected to go through each and every annual report to find out the growth prospects in the future. So how do I go and look for further screening down the potential growth prospects?
Okay, so Vineet, let me make it very simple. So I'll explain it with an example. So there is a company called Rico Auto Industries. So we invested in this company at around 42 and 45 rupees. So we started investing in this company from that price. And if you check the financials of this company, so the current book value is 47.9, and at that time also the book value was close to 46 or 47 rupees when we started investing. So why I'm giving this example, because the stock was trading at one time book value. Now if you look at their guidance, so the guidance was for 25% revenue growth with improvement in margins. So you have to understand the business. So you can clearly say that if you put all these numbers, if you put all these valuation metrics, then you will find hundreds of stocks. But then, as an investor, your work is to understand their business, and then analyze whether it is an investable opportunity or not. So, if you look at Rico Auto for an example, so the stock was trading at very attractive valuation, very compelling valuations, and the management guidance was to grow revenues by 25%. And if I see their performance, they were growing consistently from FY 16 after they sold a stake in one of their subsidiary to their JV partner, and the margins were also pretty consistent at 10 to 11% before falling to 8 and 6% in FY 20 and 21 due to higher commodity prices. And why that happened, we all know, because of the supply disruptions, all the China situation. So you have to assess the business as well, understand the business as well. And apart from that, see, I have told you that you should look at price to book, you should look at price to earnings. Also, you should look at incremental ROCs and all those stuff. So, if you are good at analyzing the balance sheets, then you should calculate the incremental ROC which it can generate on those future earnings, which you are projecting on the basis of the guidance which is given by the management. So, I'm not talking about the past in this case.
So
So, this
Mohit,
is.
again we are skipping
We are
one
skipping
step
one
in between.
step in between.
So,
So
Mohit, let me reframe the question which Vineet is asking. Basically, he is saying like if you run a screen, say screen number one, right? So you got say some 30, 40 odd names, right? Is there any further filtration criteria so as to, I mean, filter down from those 30, 40 names? And because reading annual reports and everything of all those companies would be a tedious activity, right? So
So,
his
Prince,
question is more.
30-40 is a very small number. The screens which Mohit is talking about will give me at least 500 companies on every screen. So, 30-40 numbers, so I can still read.
Not a problem, Vineet. Let him explain. Yeah, Mohit, you got the question
So
or
yeah, I have got your question. So in that case, you will have to add some more ratios. Like you have to add the debt to equity ratio. So in the companies I prefer, so they should have a debt to equity ratio of less than one. Then you can also have I think sales to receivables ratio. I'm not aware if that is available on Screener or not. So, and if the company has invested in their capacities consistently, so capex should be there. So these are some, and cash flows. Then you should look at the cash flows. Cash flows are positive. The OCF to EBITDA conversion is more than 70 or 80% of that business. So 1 or 2 year of inconsistency is fine, but other than that, it should be consistent. So you will have to add more valuation metrics in that case. That is very simple.
right, Mohit, got it.
And
So
the data days should be in control, the working capital days should be in control, so you can add in, there is no limit to that, so you can add as many ratios as you want to. But as an investor, because I am actively investing, I can read about 10 companies a day. So if I am actively investing, then I can read about 10 companies or 15 companies in a day. So we will have to do that hard work in order to identify these companies.
right, Mohit. So Parichiti, you can unmute and ask your question.
Thanks, Prince. Hi, Mohit. The question that I was going to ask you was screeners and data and information are all readily available tools these days. Um, so, how much of a time would you have before this becomes publicly available and everybody starts investing in that same company, or probably a larger number of people will discover the same stock at the same time as you? Any thoughts about this?
So can you please repeat your question? You were asking
You
about.
were asking about. So Mohit, if I understood correctly, she is asking the edge of analyzing a company at an early time, or maybe identifying the company at an early time.
Exactly.
Exactly. So
Yeah.
how you go about that, and what's your view? Because if the same information is in public domain, the edge so as to generate the alpha or identifying it early goes away. So that is the question, I think. Yeah.
Yeah, so the information is abundantly available in most of the cases, but there are still some companies. So if you talk about the past, so if we talk about the studies, the case studies which we can do. So there is a company called Atul Limited. So that company has done really well in past, and they don't even do con calls. And if you see their growth, they have grown from 90 crore profit to more than 600 crore of profit in last 5 years, from around 300 crore of net profit to 600 crore of profit. So this is not completely true that the information is abundantly available for every stock, but yeah, in most of the cases, because of most of the companies are doing con calls these days, so the information is available. But in that case also, you should have some of your mental models, or some of the screens which you were talking about. So if the stock is so there is an interesting concept of PEG. So if you are valuing a stock, then if the growth rate is 10% and you give that stock a PEG of 2, then you can value that stock at 20 times earnings. So ultimately, you will have to look at the growth of that company, the future growth of that company, and the current valuation. So this is how you can stay ahead. And about your question of identifying companies at early stage. So there is no holy grail for that. You have to look at the valuations, you have to look at the growth targets set by the company. So these are very basic checkpoints, and the sector itself should be growing. So there is no holy grail, there is no set formula for that.
Okay. Thank you.
So Mohit, you will come to Vikas later. So you invest in startups, unlisted companies, and maybe small and micro cap, I assume. So basically, the information is limited, right? And obviously, the future which lies ahead has both the sides. It could be tremendous if it grows to say mid cap or large cap down the line, 5, 10 years down the line, or there could be a possibility which happens to most of the companies that the business may not do well or stay where it is today, or maybe it went on decline. So how easy or how difficult is investing in this space, and what pointers you would tell our attendees that they should go about looking for these so as to identify a good bet?
So if you talk about startups, so we started investing in startups last year only. So our first investment was Rare Planet Handicrafts, which also got featured in Shark Tank season 1. So in startups, I am still very early in startups, so I might not be the right person to let's say make an expert opinion on it. But what I have learned from it, that in any micro cap, so the company which has a market cap of let's say below 100 crore or below 200 or 500 crore, or any startup which has a valuation of less than 100 crore or 50 crore, you are investing at a very early stage. So at that time you have to bet on the jockey, you will have to bet on the promoter. So even in our case, we also had a bet placed on Ranodeep, who was the founder of Rare Planet, who is the founder of Rare Planet. So at that time also, the whole world was fighting COVID. There was no clarity. They were expanding into travel retail. They had a vision. So uh, in startups, in micro caps, you have to completely rely on what the promoter is saying, because the size is very small. So at that time, your bet should be on the promoter.
Okay, fair enough.
There is a so travel retail, cracking the retail industry is not very tough if you have certain plans in placed uh, in the right way. But if you have got the right jockey, if you have got the visionary, like these promoters are, these founders are, then I think you can say it is an investable opportunity. But still I'm very early, so I would not like to comment more on that.
Yeah, understandable. So Mohit, you talked about jockey and in the sense like management. So what all to look for management? Because say if the management is making some promises or maybe some commentary, that may or may not happen, right? Both cases can happen. But again, what are the pointers you look for in the management so that you come to a conclusion that I can bet on the jockey?
Right. So, Prince, and all of the listeners, I think they are aware of a term which is repeat rate, or what we can say that I think that is pretty popular in QSR space. And so repeat orders and all of this. So even in the case of investment, so I'll talk about our first startup investment, which was Rare Planet. So they raised their first round, uh, let's say at a valuation of X crore. Then they raised their second round at a valuation of 6x, six times the first round's valuation. Then the third round at 10 times that first round valuation. And in all those rounds, all the existing investors participated. So that itself tells the pedigree of their management team or their promoters. So if you have that repeat rate in your company, the investors are consistently investing in your company, which were associated with you from the very early time. So that itself gives you a very big you can say confidence. So this is one way to identify. Second way is look at the numbers, what they have delivered. So if they have delivered on what they have committed, and if they haven't, then there should be a valid reason. So there are many times, because they are also into a business. So we are in the business of owning businesses. They are doing business. So even we also go wrong. So they can also go wrong. But there should be a valid reason behind that. So even in tough times, they can also miss their targets. We also miss our targets. But there should be a valid reason behind that.
Right point. So Vikas, you can unmute and ask your question. Vikas Balu, you are still on mute. Do you have any question?
Yeah, so hi, good evening, everyone. So, Mohit, basically, my question is what's your take on the real estate ancillary space, like home decorative segment, furniture, and kind of this segment, electronics, and air conditioner manufacturers? So, what's your view on this particular space?
So, good evening, Vikas ji. So, if you talk about all these spaces, all these sectors, so India is highly underpenetrated in all these segments. If you talk about, so we are invested in these companies like Borosil Limited, which are into glassware products, which are into appliances. Then we are also invested into some retail companies which are operating into retail category. They are retailing. Footwear items, then clothing items. So India is quite penetrated in all these sectors. And as far as real estate ancillary is concerned, so the pace at which urbanization is happening, so the demand is going to go up. You have to uh, just widen your investment horizon. So you have to invest for longer term in that case. But yeah, the industry will grow. That is what I think.
Yeah, basically, so I was thinking from that point of view, like the who are the major players in the MDF as well as plywood segment. So, is that can be considered for a long-term investment bet in that particular segment?
So I think these are some industries which are dominated by China. So if I talk about MDF, I think it is dominated by China. Plywood, it is, I think, highly unorganized industry as far as I have read about it. So you have to read more about these industries. So one by one, like MDF, there are many reports available. Plywood, there are many reports available. But one thing which I have noticed that only one company is doing capex in plywood. I'm talking about the listed segment. I'm not aware about the unlisted. So only one company is doing capex in plywood, while I think more than three or four companies are doing in MDF. So you
Correct.
have to look at, yeah, you have to look at all those things as well. So you have to understand the potential of that market. If China can dominate that, and then if government can support that industry. So there are many industries. I can give you many examples where they struggle when China is dominating the industry. They are setting the prices. They are dictating the prices. So at that time, there should be some government support in form of duties, in form of any other thing. So that should be there. So you will have to read more about that also.
Okay, fine. Thanks, Mohit. Yeah.
Yeah.
Thank you, Vikas. And for our attendees saying any name is taken so as to give illustration or that is purely for example purposes. No buy sell recommendation from any of us. We are not registered and we don't give any unsolicited advice. So Kalpesh, you can unmute and ask.
Hi Mohit, good evening all of you.
Yeah. Good evening, Kalpeshi.
Mohit sir, just I want to just what is your view on lab grown diamond industry?
Which one?
Lab grown diamond industry. Lab grown.
Lab grown diamond.
Yeah.
Okay, I think there is only one company which is listed in this segment, right? And I think one very good investor has also entered in that company. But I haven't read about this company. But if I look at their numbers, they are looking very good. So the growth has been pretty consistent. So yeah, they can. I think they can do well looking at their numbers, and since they are the only listed company in this sector, so I think your question is also about that.
Kalpesh, you there?
So yeah,
So
Prince,
yeah, Prince,
I this
this
question was
question
about
was about
uh, this only company which is listed into lab grown diamond segment. So I haven't read about this company in depth, but still looking at their numbers, it looks very well placed. We can
Fine,
take
fine.
we
next
can take
question.
next question.
Yeah. So Mohit, like coming to the portfolio creation approach, how you go about it, and what's your, strategy so as to allocate? Is it like you start small and then build a position, or it's like one-time lump sum position if you identify a business to invest?
So I can talk about my strategy which I'm following at present. So I can change it, but as of now, I start small. Like you have said, I don't go lump sum into any stock. So if I'm tracking any stock, I'm getting convinced on that stock, then I'll start with some tracking positions like 1 to 2% of my portfolio or 3% of my portfolio on the basis of the conviction which I have on that particular company. Then if I get more conviction after reading about that company, and I if I have all my questions answered, then I can allocate 5% to 10% to that company. And if any company is in my high conviction category, then I can increase it up to 15% of my portfolio. So that is my upper limit as of now, 15%, 17%, that can differ 1 to 2% here, there. But I will start small from 1, 2, or 3%. That will be my tracking position. Once I get convinced, then I can increase it up to 5%, and 5 to 7% you can say. And for my high conviction strokes, it can go up to 15%. So this is how I build my portfolio, because as of now I think in the current market condition, it will be unwise to go lump sum into any company, even if you are very very convinced, because there is risk involved in any company when the market cracks. We have all seen all the cycles, all the down cycles in past. So this is how I
This is
go.
how I go.
So Mohit, you talked about risk, like how you define risk, and as far as portfolio is concerned, say with diversification and other things, how you manage your risk? Mohit, you're not audible. Mohit, you are
Yeah,
on mute.
Yeah,
Was I clear on my question?
yeah. So you were asking about how do I manage this? So
so
currently,
correct.
if you look at my portfolio, so you cannot. But my portfolio is as such that the risk involved is pretty high, because I have a concentrated portfolio. So there are 4 to 5 stocks in which I have most of my allocation. So that is after reading about the businesses, reading about the markets, learning the markets from last 4 to 5 years, you can say actively. So after all that research, after doing that research, now I can take some concentrated bets also. So currently the risk involved in my portfolio is very high. So I kind of if I talk about the fresh positions which I take, so I can give a better example through that. So if I'm investing in any company, so I take a margin of 20% in that company. So if I'm investing at 100 rupees in any stock, so I assume that the price will fall to 80 rupees. So that is my thought process, so that if the price actual touches that 80 rupees, then I'm not surprised at all, because as an investor you should be prepared for all these declines if you are confident on the business model. So as long as my thesis is intact, as long as the business is doing well, as long as numbers are improving, so I will invest at even lower prices. So this is how I act when the stock prices fall. So the risk only comes from knowing not knowing sorry the risk only comes from not knowing what you are doing. So if I know what I'm doing, I'm investing in any company, I can see growth in their business, I can see growth in their earnings. So if the price is falling, that should be an opportunity for me. If my horizon is let's say 3 or 5 years in that company. So stock if the stock price falls in next 1 month or 2 months without any reason, so that will be an opportunity for me.
Great. So Mohit, like, what's your? Are you like totally invested in equity market, or how has been your allocation across various asset classes?
So currently I invest in equities only. So I equities and startups, you can say. So if you ask me what is my breakup of allocation currently, so I have a cash allocation of 10 to 15%, in between that range, 10 to 15% of my portfolio in cash allocation. Then rest of the portfolio is I think rest of the allocation is there into equities and startups.
Right. So Mohit, is it like totally fundamental based investing, or do you also use some sort of technicals, indicators, or that sort of thing so as to buy and sell?
So in my trading portfolio, I use technicals. So to book some profits, to take the stop losses as well. So I use technicals, a
A
combination of
combination of
technicals and
technicals and
fundamentals.
fundamentals.
Right. So if I were to ask like your sell strategy, of, although you mentioned that you keep a long horizon, say 3 to 5 years, but again, if say you are invested in some company and that the valuation of that stock is, I mean, beyond imagination, or maybe something has gone wrong with the stock. So how exactly you go about selling your position?
So I can give some examples for this question. So like we started investing in a company called Borosil Limited when it was trading at close to 160, 170 rupees. So from that time we started investing valuations with according to the forward earnings which we had projected on the basis of the guidance which the management gave. So the stock was looking pretty cheap at those prices around 150, 160. Then the price started rallying, the price rallied, and it went to 220, 230 rupees. Then it corrected. So at that time we kept on buying that company as far as there is valuation comfort as per our methodology. So we will keep on buying that company. And if there is any steep up move in the price, like in the time of October to December 2021, that stock doubled. So in the matter of 2 months, the price was 100% higher without any reason. So if there is any decline in the stock price without any reason, that is an opportunity. If there is any you can say rally in the price without any reason, then that is also an opportunity to sell. So these are the cycles in the market. So you will have to understand the psychology of all these investors and traders. So when the price is inching up, when the price is going higher, they get very excited. So that is the time of over optimism. That is the time to sell. So if the stock price is rallying by is rising by more than 100% in 2 months, so that is the time for you to sell. And the valuations are also at the expensive side, and there is no reason for that price to move up that much. So that is one thing. So when there is any steep up move in the price, if the price is going higher by 30, 40, 50, 60% in let's say few weeks, 2 or 3 weeks, then that is the time to book partial profits. If not complete, then you should book partial profits in that company, because the price is going higher without any reason. And you will notice this in across the board in many companies. So I can give you tens of these examples. So if the price is going higher without any reason, there is no backing of earnings, there is no backing of guidance, then that is the time to exit. The valuations are at higher side. So this is one thing which we follow. And the second thing, when our thesis is violated. So if we are investing in any company which is doing capex in any segment, so if I talk about let's say I can talk about which company. So yeah, let's talk about my portfolio company. So I own a company which is operating into pharmaceutical sector. So they are doing a capex in they have completed the capex now in oncology segment. So they are entering into oncology segment. They have a US FDA compliant plant. So if they cannot execute, so if they cannot execute, if the numbers don't flow in, so then my thesis is violated. So the thesis on which I invested in that particular company is violated. That is also the time to exit whatsoever the price is. If I am exiting at 20% loss, I will exit. So if the price is 20% lower than my holding price, then I'll exit, because my thesis is violated. My thesis no longer is there. So these
So
are
the
reasons.
Yeah, great point. So, Mohit, any case study of the past, or maybe as far as special situations are concerned, if you would like to discuss, how had been your experience with special situations?
So if I talk about special situations, I have made most of my money in special situations, even in the case of Borosil. So Borosil Group, we all know that they uh, th- there was a very complex scheme of arrangement between these companies. There were three unlisted companies. There were two listed companies called Borosil Glassworks and Gujarat Borosil. Then they had to merge all the companies in one, then demerge two divisions. So one division was solar glass, then second division was for consumer glassware and scientific products. So I have made most of my profits. You can say I have made most of my capital in special situations, even in the case of Borosil. And after that, if you see Borosil Renewables, that gave a pretty big opportunity to investors to enter at 300 or 400 crore market cap when they did capex of 300 crore. So they invested in their capacities. Their capex was 300 crore and the stock was available at 300 or 400 crore market cap. Even in the case of Borosil Limited, so their pre-COVID sales, if you look at if you look at their March 20 sales of 630 crore, and the stock was available at 130 rupees at 52-week low price, the stock was available at sub 1500 crore market cap for a company which is into consumer segment, which is into scientific wear segment, where the customer is very sticky. So these are the special situations. So the valuations are very compelling at that time. So the margin of safety is high, even in the case of Mirza International. So I will tell you frankly, I was not very positive, very much positive, and all these stocks which we are discussing are just for educational purpose. So I might own those stocks, I might not own those stocks. Please consult your financial advisor before taking any action. So if I talk about Mirza International, I was not very sure. I was very skeptical about their management. But when I saw their valuations, when I saw that the management is improving now, so all their actions are telling that they are improving. They are on that improving side. Even if when I looked at their numbers, so their debt was also coming down. Their revenues were growing for their domestic branded business. So and when we started investing, that was just because the book value was around 60 rupees and the price was below 60. So at that time we started investing just because the stock was available below that book value. And after the price rallied to 75 80 rupees, then the news came of the demerger of their domestic branded business, which we were not even expecting. So sometimes luck also plays a very big role if you are following your rules. So if you follow your rules, luck will also follow you. So this is one thing which I have noticed in many of my investments. So if you are doing the right thing, if you are following your process, then the luck will also follow you. This is
This
very
is very
natural.
natural. Right.
So
So
even at
even at
time when we invested in this company, so the price was below the book value, and the growth targets were also very good, and their export business also started doing well. So our bet was purely on the improvement of numbers, and the valuations were very cheap. And then there came the special situation.
Right, Mohit. So, Mohit, we talked about few winners. So everybody makes their mistakes in their investing journey. So, any mistakes which you think you want to tell our attendees today?
Yeah, so if I have let's say out of 10, if I have four success stories, then I have six failures. So this is how my portfolio is constructed, or this is how my portfolio has been, you can say. So I can talk about my losers like Valiant Organics. So uh, we all can remember that time when all these specialty chemical companies, so called specialty, what is special we all don't know, because the margins are still falling, the margins are still not stable. So all these specialty chemical companies, they used to trade at very higher multiple. So we so what was the thesis of investing in Valiant Organics? So if we compared the valuations of Valiant Organics at that time to all these major specialty chemical producers, so the valuations were looking very cheap. But at that time, what was our mistake? There was no growth in this company. So if we look at their FY19 numbers, so 600 crore of revenue, then FY20 584, then FY21 574. So we were expecting growth in that company due to capex, but what we missed was that there was no fire in the belly uh, i- in the promoter, because they invested in their capacities. They were the first company in India to produce PAP and PAP through that route, I think, and they were targeting third party sales from that, and then uh, they were targeting continuous batches, but now sorry, they were targeting to manufacture that in continuous basis, I think, and they are currently manufacturing that in batches. So there was a very big um, identification error, you can say. There was a big mistake from our side to assess that company, to assess their management team. So they were very inefficient, you can say. So that was one company, Valiant Organics. So we missed that growth part along with margins. So there can be growth in top line, but simultaneously there should be consistency in margins, at least consistency. If you have some pricing power, so we talk a lot about pricing power in the companies which we own. So Valiant Organics, for an example, they always said that they have pricing power, they will improve their margins. Then they came with an excuse that if the raw material prices are stable, then they will improve their margins. So they never delivered actually. And the biggest mistake in Valiant Organics was that promoter was selling and we were buying. We were buying because valuations were cheap, but actually when the promoter is selling. So the biggest learning from Valiant Organics was, if the insiders are selling, if the promoters are selling, if anyone from the management is selling, you should not buy whatever the valuations are. So this was the biggest learning from Valiant Organics. It went from 1400 rupees to currently it is at 550 rupees. And we exited some of our holdings at 700, 800 rupees. So it becomes very important to book your losses as well, because there is no definition to the downside when the company is not performing at all. So these are a
So
few
these are
learnings.
a few learnings. So there is a question from Aman. So he is asking about your outlook
Sorry,
of.
reference your voice
Your
was very
voice
low
was
at
very
the
low
beginning.
at the beginning. Is it fine now?
Yeah, please
Yeah,
speak a bit
please speak
louder.
a bit louder. Okay. So Aman is asking your outlook on electrification sector, RDSS scheme, and transmission and smart metering segment and related sectors.
So that is a massive, pretty massive opportunity size for all these companies which are into electrification segment, which are into smart meters, which are into ancillaries of these smart meters. Because the RDSS scheme, I think the size is more than 3 lakh crore, out of which 1.5 lakh crore is for smart meters. But the biggest concern in this scheme is that discoms will have to, I think, give orders for all these 1.5 lakh crore scheme which you have said, and discoms are already into losses. So I think instead of looking at this theme, you have much better themes available, like the growth in renewable energy sector, even in the manufacturing of ancillaries which are related to renewable energy. The size is pretty massive there, and the growth rate will be pretty high. And because this whole industry is very much dictated by or governed by the government, so the receivable days are pretty high. So you can get the bottom line. If you are participating in the tender, you can get the bottom line which you want, but does that convert into the cash? So if that is converted into the cash, then only it is an investable company for me. So I'll personally the, see the stock prices will move up for all these companies. So the person who has asked these questions must be tracking some of the micro cap names, some of the smart meter companies as well. So the prices can move higher, even their bottom lines, they can also grow. But the concern is cash flows, because they are into B2G segment, so they are directly supplying to all these government related, you can say, authorities.
So you have
So you
much
have
better
much
option.
better option.
So that basically runs a risk, like if a government changes or some changes in the policy of the government, then things might change because smart meters might not
Right,
go.
because if you read more about the RDSS scheme, it was supposed to come in 2020, 2020. So the RDSS scheme was prepared in 2019. It was supposed to come in 2020, but then COVID came. Then all the policies, they were postponed. Now the RDSS scheme is back. So anything can happen if your business is purely connected to government.
So, if I were to ask you about market cycles, so also like you want to talk about market cycles and how had been your experience in the companies which are basically cyclicals, and do you try to time the market, or it's like you have your thesis in place and invest on the basis of that only?
So actually, I think I have met some very good investors who are of the opinion that every company or every industry is cyclical in terms of financials, you can say, in terms of their bottom line, in terms of their margins. They are cyclical. But there should be a definition of how cyclical they are. So if I give an example of metal industry, so that is highly cyclical. So there should be a score of cyclicality to any specific industry, any specific stock. So in the case of let's say steel industry, that is highly cyclical. But if I look at any other industry like cement industry, that is not as cyclical as the metal industry is. And even if we look at the financials of the cement industry, you will find that. So there should be some score to that cyclicality. There are some sectors which are deep cyclicals, like metals, like you can say real estate. So the time for real estate has come now after 12 or 13 years. So you will have to categorize all these sectors into how cyclical they are. So you will have to give a certain score to those companies. So my experience with cyclicals hasn't been pretty good, you can say, because we also invested in some metal companies which were in our opinion, which were transitioning to value-added products from very commodity products, you can say. But actually there isn't any. Order to do anything special, you have to set up your own distribution, which APL Apollo did. So APL Apollo is a very interesting case study for all of us. How did they make a business out of out of a so-called commodity business, because of their distribution network, because of their distribution reach by uh, doing. So we have heard about Sri Cement a lot. Now we should also read more about what APL Apollo did. So about that cyclical part, I'm not very great at identifying cycles. So I prefer value and growth, which we have discussed.
question from Aman. He is asking your view on basically hydrogen energy sector and which ancillary sectors to look for.
Yeah. So I think his question is about green hydrogen. So we also did a session, a special session on hydrogen also. So producing green hydrogen is a very energy intensive process, if you see, because the process is very simple. You will have to pass electricity through water to break it into hydrogen and oxygen. So that is the process to manufacture green hydrogen. And to manufacture green hydrogen, because the word green is associated with it, so you will have to use green energy in the production of that hydrogen. So the best ancillary play for this would be all these, you can say, renewable energy companies which are working into this field. So they will be the first beneficiaries. Like we have already seen what happened with all these glass line equipment companies like GMM Fodler and then actually glass coats. So when the chemical sector and pharma sector was growing, then they were the first ones to benefit from that tailwind, sectorial tailwind, you can say. So even in the case of green hydrogen, so this sector is going to grow, and the companies which are working into renewable energy. So if you have to set up a solar energy plant, so the first thing you need is solar panel, and for those solar panels also you need ancillaries like glass, EVA, and all these things you can read about. So these are the things, these are the sectors or the subsectors which will benefit.
Right. And another question is like how you see the year financial year to, I mean, sorry, the year 2003 from the market point of view, and how you see FIIs will behave in time to come.
About can you repeat the question about the FIIs? How do I
So
see
basically, how
FIIs?
do I see FIIs? Yeah, basically he was asking like, do you have any opinion on how FII buying or selling will go in the year 2023, and how one can place oneself for this year basically. This is his question.
So I think you have to be very selective. So even if we notice the trend of our markets also, so in the last few months we have seen some the companies or some sectors which had deep value, they had a pretty good time. So for an example, PSU bank space, or you can say all the PSU names which were according to the valuation ratios, according to the valuation metrics, they were very cheap. And we have seen that they have had a very good time because of that value. So the market is also moving from growth to value. So the market is getting very selective about its choices. So the year 2023 will be unlike the year 2022 or 2021. So the companies which are growing, so in those companies you should focus. So uh, uh, in all, you should be selective about your stock picking.
Right, Mohit. So there is one question on any views on investing in silver and gold in the year 2023.
No, Prince, I don't have any views on silver or gold. I'm not trading it.
Okay, so apart from the sectors we discussed, where you think ki paisa banega? Which sectors or which themes basically, or maybe any ancillary to any space which you think can be good pockets where we can have profit pools and we can see that space as investable space.
So apart from renewables, you are asking, apart from the
Apart
sectors
from the
which we
sectors
have
which we have
discussed.
discussed. Right, right.
Okay. So, Prince, we have been very bullish on the auto ancillary space, even the auto OEMs. So, we are invested into a company called Force Motors. So, just for educational purpose. So, we clearly see that there is margin of safety in that company, and the company is closer to the book value. So, and they are operating into three segments. First is OEM, second is engine supply to BMW and Merc, third is their JV with Rolls Royce. So if we see across the board in auto ancillary space, even in the companies which we have invested, we have also taken an example of the company in which we were invested, which in which we are still invested. So the capacity utilization in all these auto ancillary companies is above 80%, 85%, 90% due to the pent up demand, you can say, or due to the pending orders, or due to the growth also, the you can say very long due growth which didn't come from 2017-18, which is coming now. So all these auto ancillary companies, and one more reason that weak players are out from this industry. The companies, the players which had weaker balance sheets, which were not managing their capital efficiently, the cash flows were also poor, so they are out from the industry. And the existing auto ancillary companies, their capacity utilization is north of 80%, 85%, 90%, 95%. So they will have to invest in their capacities again. And when they, so what happened in chemical sector is happening right now in auto ancillary sector is what we feel. And we have to be watchful of what is the situation in China and how does it unfold, because the supply side disruption is the biggest, can be the biggest challenge if it happens for the auto industry as a whole. But we are pretty bullish on auto ancillary space also. Apart from that, there
Apart
are
from
many industries to track. Even we have a group of common friends or common investors, you can say investor friends. So we were discussing about two or three sectors last night. So one of the sector which we are pretty bullish on, pet care industry, which is also growing at 20-25% CAGR. So you will find many industries like these which are growing at 19, 20, 21% CAGR, which is pretty massive. So if the industry is growing 20%, then you at a low base you can definitely grow at 30% or 35%. So you can grow, you can outpace the industry growth. So there are many industries as such.
Right, Mohit. So Nelson is asking about your view on mid-cap IT space.
So I think IT space, there are still some issues regarding to the growth. So even if we look at the numbers of TCS, so the biggest challenge for all these IT companies from now will be the talent. So even in the case of TCS, the net addition was always positive in TCS. I think this is what my partner told. He is there in listeners list, Udit. So this is my partner told me that TCS used to add employees in every quarter, and if you look at the numbers in this quarter, the net addition is in negative. So exactly, the people who have left TCS are more than the people who TCS have added so far in Q3 of financial 23. So even in the case of mid-cap IT, you will have to be very selective, because the growth is the main concern in all these IT companies, and the second key concern is talent.
Right, Mohit. So Mohit, do you think in these times when market is getting efficient, the buy and hold strategy does work, or it's like you have to monitor it rigorously and you should not be averse to churning if the things are not working out as you feel?
So, if I'm an active investor, then I'll have to look at all of my holdings. I will have to analyze all of my portfolio companies and take the decision accordingly. So, if you are not an active investor, then you should not invest in high risk micro caps, small caps, or mid caps. Your focus should be on large caps. You should do SIP in all these large cap names, which most of the experts recommend. So, if you are an active investor, then you should invest in small cap, mid cap. If you are not, then buy and hold strategies for you for getting those 10 to 12% or 15% CAGR at max.
Right, Mohit. So Mohit, you also talked about your trading portfolio. So what strategy do you use in trading? Is it like intraday trading you're talking about, or some sort of swing trading
No,
in
it is
equity?
It is purely swing or positional trading, which I do, and that is I have some methods which I have set. Like I also share some charts on Twitter in which I use three EMAs and then RSI, then volume. So I completely rely on price action, then fundamentals of that particular company. So this is how I go in my trading portfolio.
Right, right. So, Mohit, for our attendees, like if you have any questions to Mohit, you can simply send in a speaker request. I'll approve. And apart from that, any good books or good literature which you think Mohit can be a value addition to our attendees?
So I don't read many books, but I have read Rich Dad Poor Dad, which helped me in my initial times. So I read it when I started. I started investing actively in 2016 or 17, uh, around about that time. So one book is that. Then I think there is a book of Saurabh Mukherjee. So I am forgetting the name. So that book is pretty good. Then The Intelligent Investor. So these are some books which you can read. But I am not that much into books. I don't read many
Don't
books.
read many books. Fair enough, fair enough. So, any investing mentor apart from the guidance which you get from your family?
So yeah, there are many. Even I'm very thankful to thankful that I got those mentors in my life. So there is Prashant sir, Prashant Mishra. I think it is because of him that I'm at this level. Still, I'm active on Twitter because he supported at that time when no one did. And then Gunwan sir is there. So apart from my father, and my partner is also here, Udit Sharma. So he is like my big brother, and he has also taught me a lot about life and investing and all these things. So yeah, I'm very thankful that I got all these mentors, and then Rishi Bhai was also here, Ashok ji. So yeah, there are many mentors, but um, my father was my first mentor, so there is some special place of him.
Yeah, fair enough, Mohit. And even you won't believe for Prashant Mishra sir and Gunwant sir, I get so many requests so as to invite them. And on various occasion, I have also asked them. Let's see when they will agree. But again, if you have some offline conversation, so please do convey our message so that I mean, I of course I do want, but again, I get many requests on regular basis. But again, the space which they cover is very difficult to explain without naming the companies
Right,
and
because
naming.
Prince, I'll surely ask them. But what happens when you are discussing about any
About
business,
any
when you
business
are
when you are
talking about your investment style, then there are hundreds of questions which come into
which
any
come into
investor's
any
mind.
investor's mind. Right. Again, and the concern is very right because the companies are very small and some are unlisted names. So naming small companies, micro caps is indeed on a public forum is not a good thing. Yeah, totally
Right.
understandable. Correct. So Mohit, before we close, any concluding remarks from your end? And guys, for our attendees, like for such a wonderful conversation, you should give a follow to our guests. And even if you think we are doing a good work by Twitter Spaces, you can also follow me. Yeah, Mohit, you were saying something.
Yeah. So, first of all, Prince, thank you for inviting me, and I hope it was a good session. And yeah, guys, do follow Prince. He is doing commendable job. So he is inviting all the Twitter experts, you can say, all the people who are doing great job on Twitter, educating all of us in the field of stock market. So, Prince, great job. And concluding remark will be always be selective, always be humble, and learn from your mistakes, and never get too excited when you get success.
That's too good advice to close up spaces. So thanks for the appreciation, Mohit. Yeah, just trying to build a network of like-minded people and our guest. In addition, I mean, they have been very generous to me, And as we keep our spaces purely for educational purposes, so people do not hesitate in saying yes to me. So people have been kind. Yeah, thanks again. And Mohit, it was really insightful, and surely sometime down the line we will again get a chance for Q&A from our attendees. So thank you again. And guys, the session was recorded, and very soon it will be placed over YouTube channel, so you can revisit in case you missed. So thank you again, Mohit. And for everyone, please do not act on the names taken during the conversation, because those are purely illustrations and by no means a buy or sell recommendation. Right. Thank you so much. Good night, guys.
Yeah. Thank you, Prince.
Thanks.
Thank you
Thanks.
to all the listeners.